one fund, on point for today, the experts to talk about it. Welcome to the ETF of the Week. Yes, it's the ETF of the Week, where we examine trending, new, newsworthy, unique, and intriguing exchange-traded funds with the experts from VettaFi. The VettaFi.com site has a suite of tools and research that will make you a savvier, smarter, and better investor in ETFs. Todd Rosenbluth is head of research at VettaFi. Todd, let's dig into it.
Good to be with you again, Chuck. Thanks.
Your ETF of the Week is
the Capital Group Core Plus Income ETF, CGCP.
CGCP, the Capital Group Core Plus Income ETF. This is an interesting bond fund, intermediate bonds now. That's an interesting discussion to have at this point in the yield curve discussion by itself. But is there more to it than that?
So this is an actively managed, you mentioned, intermediate bond fund that can take on some additional credit risk. That's the plus income part of it. So this fund has roughly 10 to 15% exposure to non-investment grade bonds. It's yielding the fund at a 5.5% yield. It's relatively cheap for an actively managed bond fund because Capital Group is using its scale to its advantage. It's about a year and a half old, but it outperformed in its first year the broader indexes. It's outperforming to start 2024. And given this uncertain interest rate environment, we think active management can make sense within the fixed income space.
Okay. Now, it's also active management out from Capital Group. Longtime veteran fund managers, not that experienced on the ETF side, but this fund's almost $2 billion and it hasn't been around very long. So obviously they've got some juice here, but how do you like their ETF offerings?
Yeah, so Capital Group came to market just over 2 years ago, and they launched their first products. They've been very successful, $20 billion overall. Now, Capital Group, many people are familiar with, is the firm behind the American Funds mutual fund suite. So they've got equity and fixed income products. They've got a depth of research team to be able to support their equity and fixed income products. And I think that's coming to bear within this relatively new active fixed income ETF. This is not a 2-year-old management team. These are people who've worked together in some capacity at Capital Group that are now part of this ETF, and they're certainly demonstrating their success.
You talked about what this fund gets into, and at VettaFi, what you guys do and what you particularly have always done in your career is try to look at holdings. And so it's interesting to me that here you are talking about the yield on a fund that puts a piece of its portfolio into, unrated, unregistered, junky-ish securities. At this point in the scale, that's part of what you want to do. I mean, is that part of the appeal that they're going to a spot that a lot of folks are avoiding right now?
Yeah, so we think more advisors, more investors are willing to take on credit risk in 2024, given where we are in the Fed cycle. The Fed is likely to be cutting interest rates probably by the middle now of 2024. And now it feels like taking on credit risk is being rewarded. So we like the fact that this active management team has the ability to do so, is doing so in double B, single B rated, or some unrated bonds, but yet it still has its core within the investment grade universe. And you get a mixture of mortgage bonds, of corporate bonds, some treasury exposure with this fund. And we've gotten to know them at VettaFi through some of our virtual events. And this team seems top notch in their expertise, in their ability to be flexible in their approach and where they're putting their money to work. We think this is a good fund to take a closer look at.
Now, that said, the yield you mentioned was about 5.3, 5.35. It just so happens that this past weekend, somebody was asking me, like, can you get over 5% in a savings account? And the answer is yes, you can. So worth the risk to be doing this at a point where we have so much uncertainty with what the Fed's going to do?
So with fixed income, you want a combination, or many people want a combination of stability of income, but also some capital appreciation potential. And so that's what this fund is attempting to do. It's looking to generate return above its overall yield through investment selections, through a top-down and bottom-up approach to picking bonds. If you're in a savings account, more power to you. That money is stable and safe, but you're going to not get additional return off of that. There's also less risk. So this is a fund that makes sense for people who are willing to take on a little bit more risk within their fixed income exposure in exchange for more income, in exchange for higher returns over the next year to two.
And the role this plays in a portfolio, obviously, a lot of investors already have some measure of bond fund. Why would you want to add this? What are you hoping this is going to do? And if you've got something that covers the intermediate space, do you look at making a change to this fund?
So many ETF-oriented investors, for their fixed income exposure, their bond exposure is in something that's passively managed, tied to the Bloomberg Ag Index, whether it's an iShares, a Vanguard product, or others. This is active management. People believe in active management within the fixed income universe. They are still early in adopting actively managed fixed income ETFs. This fund itself is relatively new, so I think that's going to help move this along. So this is a fund for somebody who believes in active management, wants the ETF structure, and wants it to come from a firm with a proven track record like Capital Group.
It's the CGCP, the Capital Group Core Plus Income Fund, the ETF of the week from Todd Rosenbluth at VettaFi. Todd, talk to you again next week.
Sounds great, Chuck.
The ETF of the week is a joint production of VettaFi.com and MoneyLife with Chuck Jaffe. And I am Chuck Jaffe. You can learn all about my hour-long weekday podcast by going to MoneyLifeShow.com or by searching wherever you find great podcasts. And if you're searching for more information on investing in exchange-traded funds, be sure to check out VettaFi.com. It's a great site with plenty of tools to help you out. They're on Twitter at Vetta_Fi. And Todd Rosenbluth, their head of research and my guest, he's on Twitter too. He's at Todd Rosenbluth. The ETF of the week is here for you every Thursday. Make sure you don't miss one by following along with your favorite podcast app. We'll see you again next week. Until then.